darkness of night. We live to die. We lose our souls every day. We lost our minds. We don't remember what's wrong and what's right. The world is dead but we stay. 'Cause we are born as living fights. We live to die. We live to die. And we surrounded by the night. We live to die. We are shadows in the neon light. We are shadows in the neon light. We are just shadows. It's supposed to be that we die. It doesn't matter if there is no light anymore, no light anymore. 'Cause we are born as living fights. We live to die. We live to die. And we surrounded by the night. We live to die. We are shadows in the neon light. We are shadows in the neon light.
It's rough trying to get going. Rough trying to get going. That's all I can say. Orb was started. A few minutes in. Oh. Something to worry about, guys. What's going on? Okay, so it broke above. All right, is it gonna stay going above? What's happening? What is happening?
Sorry, I interrupted you there, Troy. Did you want to show anything else?
No, I'm good.
All right. James asking another question. Maybe you can address that for us, Tiger.
Is there a reason why when dollar Japanese yen is bullish, all the yen pairs also becomes bullish and vice versa? Yeah, I mean, look, typically when one currency goes up, it's going to do, it's, you know, especially on a report release, it's going to, that currency is going to go up or down with, regardless of what it's paired with. The only question is how far. But yeah, that's really it. I mean, you know, for the most part, the Japanese yen, I mean, the Nikkei will do the same. There's some reports that will do the opposite. I think the best example would be like here in the US, the CPI and the PPI. Well, when that goes up, that's negative for the stock market because that means we're paying more, you know, paying higher prices on everything. But it's good and bullish for the US dollar. So it's more of an inverse relationship, but all the other reports are fairly much the same. Whatever comes out, it's going to push both up or both down. But yeah, that's just typically the way it works. I mean, you compare the yen with the dollar, the euro, the pound, the Swiss franc, doesn't matter. It's typically all gonna move up or down at the same time. You know, obviously depending on if it's the base or the quote currency. So,
do you think that also is related to interest rates in the opposite direction? As in, like today, the ADP report was horrible, right? Markets should go down on that, but the market's actually recovered nicely and is positive as we speak. But is that because everybody's going, employment sucks, so the Fed will lower rates, so we're going to be bullish because the Fed's lowering rates?
Well, yeah.
How does that translate into currencies?
To fill it.
Yeah, well, you know,
there's so many big currencies all the time. And that's why it's not one of my favorite markets. Some guys are way better than I've ever been in it. There's so many factors in the currency side of things you've got to take into consideration.
Yeah,
I find these days with the indices mostly, it's all just about what the big talk's about, right? So the tariffs or interest rates being the main focus. Whereas you've got two different currencies versus each other, and you know they crap in one country where the other crap in the other country, and they all play different roles. And the banks, obviously, that get involved. So I don't know. That's my 2 cents worth. I find it very difficult to trade currencies or try to read charts of currencies.
Well,
but
and
that's why we
see,
got paid.
yeah, well, and that's why I like to look at all the economic factors as an aggregate, because yesterday is a great example, or last week. I mean, we had that negative GDP report. Okay, third month in a row. Really hurt the dollar. Yesterday we had the JOLTS job openings.
Well, that was very bullish though.
Raised the dollar.
Yeah.
And then today we had the ADP number and it drops. And then now it's obviously kind of rebounded. So, the big banks know that. They want to see which direction the retail traders are taking it so that they can manipulate it to the other side and collect that liquidity, create the liquidity, zones on the other ends of wherever price is kind of balanced out. So that's that's the trick. That's the game they play. I mean, they're creating that liquidity on purpose to confuse us, the retail trader, before ultimately moving the market in the direction that they want to take it, because they move the markets ultimately in the longer trends. I mean,
the market has been ignoring the bad news. I mean, just literally ignoring
irrational exuberance. Yeah.
And again, this is a great example of where bad news is good news, because if they think the Fed's going to lower rates, they cheer, right? And what I don't understand, this is where I have a big disconnect. If you say, why does the Fed lower rates? Because the economy is sucking and it needs to lower rates to stimulate the economy. That's what my macro economics say. So then, but you got all these people buying because the Fed's going to lower interest rates. And I'm like, you're missing the point. The point is that they're lowering interest rates because the economy stinks, right? It's so backwards. So, and I agree with Richard. When it comes to currencies, even with vast amounts of economic and background in that area, I still find currencies extraordinarily difficult to assess. So, obviously I'm staying in my zone. I'm in the ES zone.
Well, it is difficult because, when you're trading stocks, or you're trading an index, or you're trading whatever, it's that one item. When you're trading currencies, you gotta trade the relationship with two currencies. So that's where it can definitely get tricky, and that's why it's just good to because perfect example why I don't like to just anymore look at just the last report, because before I looked at stuff as an aggregate, I would have taken yesterday's and just bought without any issues. Yesterday's good report for the JOLTS job openings. Well, coming to today, and that would have wiped me out because I'm looking, just at the most recent report. So it's tough. I mean, look, it's not something that happens overnight. It takes time. Trading is definitely not a get rich quick scheme. It's not a slot machine like you go to the casino and play. So it just takes time to really kind of wrap your mind around all the way the markets work and how interconnected everything is worldwide, especially these days. So there's a lot to it, but just take a bite. It's just like climbing Mount Everest. Just take one step at a time. Just learn a new thing every day, even if you just want to see how the CPI report affects the dollar or the Japanese yen, and just kind of slowly go at it. And obviously on the technical side, the same thing. Just kind of look at how all the indicators work. Ultimately, you'll figure out your own algorithm, what's comfortable for you. That's why I said yesterday, there's 1,001 ways to trade, but not every one of them are going to be suited. What's suited for Richard might not be suited for me. What's suited for me might not be suited for
personal preferences. That's for sure.
Yeah, so it just takes time. It's a journey, and it definitely doesn't happen overnight.
Yeah. Let's quickly look at my charts if you guys don't mind. Good morning, Robert.
Hello, Robert.
Hi. Joining us again. Pre-work schedule.
Yep.
Funny, before I just jump onto the NASDAQ, the dollar index this is a shift pitchfork in action here that I've actually drew when we started these live sessions for, I think it
Should
was
have been paying attention.
another
to
guy called James, not the
rather
one we
than
have in
trying
the
to
room
get it
today.
going.
Now coming to think of it,
Just
because when I
hope.
seen James here in the chat, I was
Hope.
like, I must look at the dollar index. I think we've done this around about, geez, when was it? March, April? And we can see now, and I have this little box there. So beautiful target, eventually been hit. Didn't short the dollar index. I'm not can't trade it, can you? I'm not even sure you can. But yeah, low median line, prices bouncing up from there. And this is how you can also use these pitchforks to, you know, try and judge whether you might see now strength in, let's say, the euro US dollar, pound US dollar, whatever. It's interesting that you've shown your chart with the pound US dollar, Tiger, being in that zone, where it also correlates with the dollar index actually hitting a median before, you know, the reversal low in the pound US dollar, where we now get a small bounce on the dollar index. In any case, should
Go
price
Go
continue higher, it just gets raised up here, then, I mean, this is a very far way to go. I don't think it will go that high. You know, maybe towards these lows, 98. But what's important about these median lines is that eventually when you do get a break of it, that's generally, in this case, if that would happen, a very bearish sign. And then you might have then your next target towards the lower 50% median line, around 93, which is also
we
fair
really didn't
distance
check
away.
the bias.
Anyway,
We're probably
I don't trade the
have to fall
currencies. It's just be interesting to maybe keep an eye on this from time to time and see how price behaves with this median line. Are we going to get a jump higher here, or is it eventually going to break? And if it does break, maybe that just gives you a good confirmation that price is in fact getting lower and where it might actually gravitate towards. Anyway, I thought that's just a interesting thing to look at. Let's go look at the NASDAQ. I'll show you my troll face I was talking about.
Oh, I can already see it.
There it is. I was actually mucking around with this a little bit earlier. Imagine looking at this troll. It's not a nice head and shoulders, right? It's like there's his eyes over there.
Oh.
It might become a very sad troll if price breaks this triple bottom there with his fingers here.
You give him some teeth.
Looking
Sharp
over the
teeth.
wall, you know.
Well, that's
And maybe you should get some sharp teeth going here as well. So the big scary troll. And you know, I'm sure a lot of traders will be looking at that. I just thought that was pretty funny.
trading chart art. It's a real thing. If you go Google it.
That's the thing on TradingView, huh? There's a lot of guys that actually do that. Doing chart art. I thought that was a little bit of an entertaining session. But anyway, back to the seriousness. Yeah. We've just broken these lows from yesterday, and these lows were set on the 27th, which was Friday's low. So it's sort of a bit of like a, I wouldn't say it's a triple bottom, but it definitely looks, if you just look at price patterns, like a little bit of a topping type of formation, very rounded topping formation, with price that obviously moved lower. Very strong bounce upwards now. Asia session was slightly bullish. Then during the London session, price start moving lower. So now we smack bang in the middle between yesterday's low and the high of the Asian session, or slightly above that. So what to do? I've got, you know, no bias here at the moment, to be dead honest with you. If, for example, we see a little bit of divergence between the ES and the NASDAQ, that S&T formation that I've shown you guys before, or the technique that they call smart money technique that some traders use, then that might be an indication that price could continue lower. After making this double bottom, slightly breaking it, making a low with Friday's low, I think if it would revisit that and break it, then we might get an accelerated move down, and that might actually be the decline that we've been stressing about, or not say stress about, but that me and Troy's been sort of thinking, you know, or worried about that it might occur. So not there yet, but it came very close. This might all just, in my opinion, just be a bounce higher. But where to is the question. If I want to short this, what should I do? I just got no clue. I can only look here at the technicals.
I thought we were about to get stopped out right now.
Around about
That's crazy.
22,581
over
against
here
looking at the CFDs, right?
another challenge I'm trying to
22,598
pass
outside.
over here in the opposite
And above
direction.
that,
just because
we
I thought
got this
that was
red
gonna-
zone over here,
we were gonna fill that.
which
That's
is
crazy.
a bearish fair value gap. So
Let's hope.
potentially,
Let's hope.
I'll be interested in the
Get
shorts.
that up there. Let's go. Make
Only
it
if
happen.
price, where's my rectangle? And get us sort of in this area over here. Get in it. Maybe break above the London and the Asian highs.
All right. How high do you think
then
we'll go? Do you think we can go to
reverse
the
lower.
bottom of
And if
yesterday's?
it does reverse lower and I've got a bearish S&T, it formed on either the 1 or
Maybe.
5 minutes, and sometimes if they don't show up there,
Maybe?
then they can show up on the 15 minutes, 10 minutes, they can be on any time. The important thing is just not just to jump into a trade, but then to obviously wait for some sort of reversal signals, like inverted fair value gaps, or what do we call a change in character, or price structure change, or whatever the case might be. Where price is currently on the NASDAQ, I don't know. I would like to see if I want to short this.
Push through.
A break of these
Do it now.
London and Asian highs.
It looks like it
which is
could
currently
be.
around about
You know what, I don't even know what this
20,
level is
about
from here, but
22,600.
it's interesting.
Again, looking at the CFD, so the numbers will obviously be different on a future side of things. So I'm going to set an alert here actually, and hopefully during the session we'll. I'm just going to leave it on for today. Well, it's actually until 2nd August. It's quite long, but anyway, we'll leave it on there. And then I'll revisit this chart if price does make it that high. Quickly, before I pass things back to you guys, let's quickly
Come
look
on.
at crude oil.
Come on. Let's go. Let's go up.
And we were talking yesterday about price being stuck in a range.
Up.
It's pretty much now at the upper end of that range. I think I looked at this morning.
Oh, that's right.
But really, really nothing to do here for me at the moment. It's just running
That
sideways.
is
Right?
correct. Okay.
And it has done so since that decline ended.
You're still
on
showing the NASDAQ.
All right. And now,
Yes.
there we go. So it's still stuck in the range. That's the awful range. And yeah, so I'm staying out of crude oil for the time being. So hopefully we see something set up on the NASDAQ. Price is pushing higher. And hopefully I'm not on the wrong side of things here again. But yeah, it's been a difficult one trying to short this market. But I think once it does crack, and I think it is going to crack at some stage. It's going to be playtime for Troy, especially.
Yes.
He's a closet bear. So
Yeah.
we'll see.
Oh.
How it goes. Yeah. So I
that's
want to
a
see
profit
something
right
like
there.
this, like we've seen here
Do it.
during the Asia and the London session.
wanna-
Before I switch back to you
wanna
guys,
check it out. We should have stayed in.
slightly lower lows on the NASDAQ, and
Right.
we made
I want
a
to find out if
highs
these
here
are
on
tradable.
The
Are these
yes.
tradable?
So SMT, bearish SMT. Right, so let's see if we can get that if price hits these areas and see what happens when price reaches us or breaches it.
Order filled.
Ideally, I would like
Order
to see
filled.
price
In.
flip these highs and immediately start seeing a reaction lower. And then we can either switch to the 1 minute time frame if you want to be really aggressive and see if there is a presence of an SMT,
Somewhere around
see
there.
if we can get a bearish fair value gap to form, or bullish fair value gap that gets inverted.
Just want to
Obviously,
see if this is in a go.
it changes to inverted fair value gaps. What I want to say. Sorry, guys, I'm very congested.
Would
I don't know
we
what
have gotten
else.
stopped out?
So I sound
We're gonna find out
weird,
right now.
Oh,
muffled.
Right now.
yeah, we got pretty
Good.
bad allergies here in
Very
the US.
straight.
Oh, it looks like we would have
But yeah, so
gone.
that's what I'm looking at. Just the NASDAQ and
Could have gone.
I'll show you a little bit on the where this the dollar index is standing at the moment. So yeah, back to you guys. I don't know how's that. Which market were you looking at, Tiger? Were you set an alert?
Which one did I just set? Take a look real quick. Oh, it was the NASDAQ on a smaller time frame. I think that was the one. Euro Japanese yen as well. Look here. Yeah, Euro Jap.
Good.
So, yeah, if I share my screen for you, share screen. Just take a quick peek because it's actually coming down.
It's coming down
to my zone. So we'll see if we can maybe hit it. Yep, right there. I just kind of, I basically made from the low point to the last red candle, which was that. So we might actually get a little close here. Get close to filling one. I like how when price left the zone, it had 1, 2, 3, 4, 5 green candles. It was strong enough to wick above and break this top right here. Obviously, we're looking at this on smaller time frames. So, yeah, maybe if we can get a move in here, then I may be looking to take it. But obviously, I'd want to wait, get some type of confirmation. 1 or 2 minute, maybe a 3 minute candle. Or maybe even a 5. It all just kind of depends. Now, one other thing that helps to get a little bit more confirmation if a zone is going to work or not is, and I actually have a good example on the DAX because I'm paying attention to it right now as well. Let me just flip over here. So obviously I'm looking at the DAX now. It hit earlier this morning before I got on. It hit on a 2 hour, last red candle down before the big move up. Came down and flirted with it, didn't touch it, but came down again and just barely wicked in, but it moved pretty quick. So I missed it because I wasn't on top of it. I was doing my analysis, getting ready for the show, and I just so happened to miss it. But something else that I like to do from time to time is obviously you need a counter trend to come into your zone. So one extra confluence that I'll use from time to time, especially on one like this, because I have not traded the DAX near as much as I have, currencies and everything, is I like to put a line up here from that recent swing high and just kind of, go to the next point. And it's just good to see price.
Man,
I'll find my
guess it was going
tool.
higher.
I don't use it as much on here. There it is right there. Yeah, I want to see if it breaks that.
Okay.
Before coming back. Maybe catch an area down here before buying to the long side. I just do it on pairs or assets. I don't trade as much because, one thing about trading is you want to learn the character. You want to learn the behavior of especially in the currency market, you want to learn how they behave. A lot of currency pairs behave differently. What's a big move? A lot of pips on one currency pair may be small on another. So
yeah, I call that the personality of the pair, or the ES. Oil has its own personality, and you definitely want to watch it to try to pick up the differences in the personality versus some other. Gold sometimes trades a lot like crude, but not from a personality perspective. But crude's got its own, as I'm sure Richard can agree with me, crude has its own personality.
Oh yeah, big time. It's quite a wild horse, it can be. I think it was, who was it, James, that also trades gold, one of the other coaches. Oh, sorry, Walter. I'm talking about James. Walter, he likens gold to being a lot similar to Bitcoin, vice versa as well. Which is quite interesting. Especially the techniques that he uses. Some sort of similarities to what I use, but it's very interesting to see how with his strategies and his setups, how gold and Bitcoin, move very similar. Obviously, they're not correlated markets.
Yeah, that's why
their behavior is very, very similar.
And I think that's partly behind why a lot of people will say, just, especially if you're starting out, just start with one, maybe two currency pairs as far as the Forex market's concerned, and just get really good at those. I mean, learn it, because once you learn it and you get good and comfortable with one pair, and then you flip to something else, maybe, if you're used to euro dollar, then you flip to a Swiss Japanese yen or something like that, you're going to see it's totally different. Because they, and again, they all have their own ranges they move. I mean, that's why I like to stay away personally from the low ATR pairs. I mean, I want something that's going to consistently move and not just move like molasses, especially when you start getting down. And that's a big reason why whenever I've set up my watch list, I set mine typically with the majors on the top, anything paired with $1, but then below that, I'll start from the highest ATR all the way down to the lowest ATR, which New Zealand.
Oh, nice.
See New Zealand Swiss franc as an example. You see my ATR; it's only 43 pips a day. On 64 pips for New Zealand CAD, 78. So actually, I need to reorder this because it looks like some of them have kind of adjusted, and they do adjust from time to time. And that's why it's good to see the bar, the line, and just see if it is going down, or people getting tired of it, or is that line going up because there's more and more interest. I mean,
so it will change from time to time, right?
Yeah. I mean, if I just isolate just the ATR for Swiss franc, pound Swiss as an example, I mean, you can see, there for a while it was 80 pips. In the 80 pip range, and then there for a while it spiked all the way up to 150 pips of range, and then now it's since come crashing down to to the you can chart everything. Right, Troy?
Yeah,
that's right.
Traders, I think it's very important to be very visual, right?
One thing I wanted to say earlier, but I didn't want to interrupt the flow of things, was that I've found over the years that trading with a partner or, another trader a couple days a week is extraordinarily helpful, because just like we're doing with one person doing currencies, one person doing NASDAQ, one person doing, not only do you get an extra view, but you also are expanding, and you're not just getting a view, you're getting a professional view, right? And so it's like me, when I go in here, I get trading ideas. I'm like, I would never think about trading the euro yen, but that's a setup I really like, so I keep coming, looking behind me at my currency wall and thinking, okay, I'm going to kind of watch that, but I wouldn't normally do that, except that we're in a group. And the other thing that I wanted to highlight that you guys do, and you maybe don't even realize that you're doing it, is whenever you give a tip on how to adjust an indicator on TradingView. I mean, I've spent hours screwing with the software trying to get it to do something. And I mean, we can all admit that, right? I'm like, I feel like sometimes I'm an idiot. I'll spend hours and hours to do one little thing, and it's like 3 clicks, but it took me hours to figure out that it was 3 clicks, right? And so it's a huge advantage to have other people who know the software or have a particular indicator. And I've written down both of those indicators that Tiger uses, and I'm going to go look at TradingView for the 80% off, because I know that the Project X that we're going to be getting for futures interfaces with TradingView. So I may need to make a switch from NinjaTrader over to one of these other softwares. And man, having you guys as a resource for, well, how did you do this? Makes a gigantic improvement, or, being able to do that.
That's right. Yeah. I mean, I've been trading with NinjaTrader for, a very long time. I think back since 2014, 2015, something like that. It's been around since that long.
Well, I hate to get rid of it because I've got the lifetime license, you know?
Yeah, I just I like with the drawing side of things, TradingView probably the most. You know, it's just so easy to use, and the accessibility. You know, accessing it from your phone. Although I won't trade from my phone, but you know, if there's an emergency and you, let's say, you are trading with TradingView and connected to your broker, then which we're not, because I'm obviously executing on one of Hello Prime's platforms, but. You know, at least for emergency, you can access
Order filled.
Order filled.
It's and they've been expanding quite big time, right, over the years. I don't know how many users they have at the moment, but yeah, I think you'll enjoy TradingView. It's very easy
It's
to
the
use.
best. It's
Yeah,
the best thing ever. When I first started trading, I think there was a free one called, what was it called? I think it was just called freestockcharts.com or something. And gosh, I used that thing for several months when I was cutting my teeth, and it just was the most basic thing ever. It was like you know, like an old box TV before the smart TVs came out, if that makes sense. But yeah.
Well, we got a comment from Robert saying that he's also using NinjaTrader. Yeah, Robert, well versed in it. I believe Troy is still using it, so it's a great platform. I mean, for algorithmic trading, bots or whatever.
Well, I
mean,
think
that's pretty much.
But I
Is it
agree with
because
you,
of the
Richard. But I do
self-management?
think I do think that TradingView is sort of the taking over from all the reasons why you wanted NinjaTrader. TradingView is filling in the gap, and honestly, the number of indicators that's available for TradingView is exponentially bigger than the NinjaTrader ecosystem. I mean, NinjaTrader has been around a long time, but and if I can't wait to. I'll probably do the premium trial on TradingView if it has footprint charts, because to me that's kind of my. If it has footprint charts, man, I'll switch over. Because the other thing is that I think that PineScript is actually easier to use than NinjaScript. At least that's what I'm seeing.
It's pretty simple.
I'm hoping I can figure out a way to convert my custom stuff on NinjaTrader over to TradingView.
I mean, the amount of jobs that's available just for guys wanting to convert their NinjaScript to PineScript is just insane. You can go on like portals like Upwork or Fiverr, all those sort of stuff, the services that these guys offer, and they charge a pretty penny to do that. Obviously, I can't code. A lot of people will, fork out money to have it done. But it is, it's pretty interesting how they want when they have something that's been developed for NinjaTrader.
Ooh, good thing I didn't put it on the other one that I was trying to pass.
Yeah,
I've really seen the vice versa. I mean, there's so many nice or great community-driven free indicators that are available as well. It's just another cherry on the top for me personally.
Yeah, and you can even use AI these days to just kind of tell it what you want. I mean, I kind of, because I don't know anything about coding either. I'm right there with you, Richard. But yeah, just giving simple prompts to, whether it's ChatGPT. I haven't tried. That's one thing I've used ChatGPT for instead of DeepSeek is just playing around with the PineScript code. And yeah, you can make your own just by putting in the prompts. I mean, you don't even have to know the language anymore. I mean, obviously, if you want to do it right and understand it or know that it's being done correct, obviously, it might be good to learn some of those languages. But GPT, AI is changing everything. It's crazy.
If you have that link to that 80% off, that would be awesome too.
Oh, yeah.
Just go to the website. It's pasted straight on top.
Okay.
Tiger?
Yes.
James is asking now the question, does anyone know why the pound is getting beaten up?
Governor,
I think we touched on that in the beginning, right?
Yeah, the dovish sentiment apparently came out of their lip-flapping session yesterday. And I mean, let's take a look. I mean, let me just flip over here to this chart here. So yeah, the eco surprise meter, just an aggregate of all the economic reports put into a percentage. It's sitting at a 40%. So 50 is kind of the baseline. Anything above 50 is pretty well good for the currency. Anything below is a little negative, right? So clearly the one getting beat up is Japan. Now the dollar has officially went over 50 because it was down in the 40% level the last few weeks or so. But if we flip over to the UK, I'm sorry, that's the euro. UK. I mean, yeah, they had the PMI report come out yesterday. It was spot on. So that was a neutral sentiment. But you're looking at negative reporting from the GDP, the retail sales, and then the employment change reports. Now, the employment change, that's an old one, but that's the most recent employment change. But yeah, June 20th, negative retail sales. Look at the forecast for that. Negative 0.5. It was an actual of negative 2.7. That's a huge miss. So, yeah, traders clearly didn't like the pound because of that. And then same thing with the GDP growth, middle of June. I mean, negative 0.1 forecast, but it was an actual of negative 0.3. So that seems to be the ones really weighing it down. But yeah, and again, that's probably why the governor of England was so dovish. Right here, dovish comments of the Bank of England's Governor Bailey.
Yeah.
So just kind of a combination of those, recent couple bad economic reports, and then the lip flapping. That's pretty much it.
Talking heads.
Yeah. But yeah, you just get one or two good pieces of news come out, one or two good reports, and I mean, the currency markets can flip. I mean, the pound could turn around and go up, but for the time being, it's just getting a little beat up. If I flip. Yeah, let me just flip back over to the pound dollar. Just what's it doing? An example. So see, I did have that 4-hour zone. This is, I think I went over this first thing, but yeah, you add that into the combination of the running into the overhead supply. So anytime you hit a supply or demand zone overhead on a higher time frame, it's going to react. Now, I have this upper trend line. So clearly it's been great overall since, what is that? Yeah, middle of January. So right before Trump got into presidency. I mean, I'm not saying that's why it started going up, but if you look at it in the context of the whole year, the pound is strong. But yeah, what he's talking about is this recent move, for the last 12 hours or whatever it's been, but just bouncing off that overhead resistance points. And then the lip flapping. That's why I avoided that. I mean, that zone was right on a 38.2 level, but because it hit that overhead resistance, because of the dovish sentiment, I just ignored that zone right there. And clearly it chewed through it like a hot knife through butter. I didn't get a single bullish 15-minute candle like I like to see. It had a lot of volume when it hit down here, but everything was red. So that kept me safe. So, that's why I'm just looking for the next zone. I mean, if it comes down here, then that's a complete retracement of this swing low, swing high. And it's pushed farther enough away from that overhead resistance. So I'd feel way more comfortable hitting, especially, let me get rid of that old zone since it doesn't count anymore. But yeah, I mean, updating my trade plan for the pound dollar. If I get price to come down, maybe go a little sideways, come up, come down. If I can hit the demand zone and also hit where that line came through, then that's just extra confluence. That overall up trend line that I put in, going right through that demand zone. So excellent. That's basically what you call an odds enhancer. So obviously my main thing is catching those unfilled orders, but if I can get other odds enhancers in my favor, it's gonna make me feel more comfortable about 0.5% risk. Maybe you bump it up to a 1%. But then not to mention things like the VWAP. That's a little far away, but if we look over here on a 4-hour, I mean, we could probably look to put in a VWAP line at some of these swing lows.
Do you
right there?
Do you change your size based on confluence?
The size? Yeah, I kind of range right now between 0.2, 0.5. I'm pretty conservative. just like most people, I blew an account early on because I wasn't paying attention to the risk. So that's one thing I really hammered into myself was get bored. Get bored making money, and when you get bored making money, then you can start increasing those risks. So.
Well, like it's just an example. One of my, when I say the word confluence, it's two or more, and those are completely independent of each other. Like for instance, a trend line that's based on lows versus a demand zone versus a Fibonacci retracement. You start adding those in, and you get that nice juicy confluence.
Yeah.
And the question that I have for you is, I tend to it makes me more aggressive. So maybe I take I don't wait until it hits my actual entry. I get in a little early, and then when it comes down to my number, I get in some more, and
order
goes below my number, and I get in some more. Do you use the confluence as a way to enhance your size, or do you just say, no, I'm not going to get sucked into that. I'm going to just take the minimum size and add to the position as it gets more profitable? Or, how do you size based on confluence?
Yeah, I mean, I kind of right now I'm just staying between the 0.2 0.5. But yeah, I mean, I don't want to say, because ultimately all I care about are the unfilled orders. Now, the confluences just help me to sleep easier at night.
Okay.
If that makes sense. Or it might maybe help me to feel a little more comfortable holding a trade over the weekend. Obviously right now it's crazy just because it's nonstop news,
you didn't see that, guy.
But yeah, I mean, it doesn't affect me a ton. It just helps. I mean, like right here, perfect example. Obviously we put the swing low, swing high on the fib. So that's another confluence. The 61.8's going right through that zone. We got another dynamic support line on this, on my master pattern contraction box. That's a major box, pushes out that contraction line, or that fair value line, right? Another confluence is the strong fair value gap coming out of that zone. Another confluence is price didn't spend an exorbitant amount of time at that zone before it left. Another confluence is on this swing low, I put my anchored VWAP, and you can see how it kind of respects. And then that's going to ultimately, if I draw that in, it's ultimately going to go right through that area as well. Right? It's just like this. So that's another confluence. I mean, the more confluence, the more what I call odds enhancers or confluence that you can add into your favor, the better. Ultimately, you don't want to go over, of course, everybody will tell you a different thing. Never bet more than 2% of your account on any one trade. I mean, that was one thing that we were taught in the academy. Yeah. But they basically said, just, as far as when you're first starting, because I know we'll have a lot of new people on this channel. I mean, just start at whatever the lowest your broker allows. Maybe that's a 0.01 lot or a 0.1 lot or whatever, as far as the currency market is concerned. But yeah, just do 10 trades. Once you have a decent winning percentage and you're seeing tiny profits, the ripple effect starts to take hold whenever maybe you go back up to 0.02 or 0.2. So just slowly increasing your lot size in the currency market, or your share price if you're trading stocks or whatever. Don't move it until you get bored making money. That's what that's what I was taught. So whether that's 10 trades, whether that's 20 trades, just start off at the lowest that your broker allows, and then just slowly build up from there. That's essentially what I did. I mean, I started at the point.
Well, that's good overall advice, but you didn't answer the question.
Oh, I'm sorry.
See, you're basically saying that it doesn't really matter how much confluence you are. You're going to stick with your standard size.
Oh, yeah, pretty much. I mean, anywhere from 0.2 to 0.5. That's kind of where I'm at.
Okay.
It just depends on a few factors, but yeah, ultimately for my taste, for my comfort, supply and demand.
Gotcha. Nice. I just want to quickly share my screen again.
Yeah. Sorry, I'm hogging the space.
No.
No. I mean, obviously, Tiger and I get going back and forth, and Richard, you're just hanging on for the ride. So we want to see your stuff, Richard.
Yeah,
we really do.
I'm trying to deal with this congestion that I've had all of a sudden. I'm trying to breathe. So that's why I'm not talking too much. I do apologize. You guys keeping me entertained as always. So all good with that. Yeah, so that alert went off on the NASDAQ. Price has now taken out the London and Asian highs. Been pumping upwards, right? Clear to see. Is it sort of like a
You're trying to
bullish
catch
trap or something?
You're trying to catch the knife that's falling in the opposite direction.
That's right.
Yeah.
The rocket.
I'm interested still in that area that I've drawn. I'm probably just going to upgrade it or widen it a little bit more. So if I can see any substantial weakness within this area currently that I've drawn there, then I might be interested in taking a short. We still have 15 minutes left on today's session, so I really hope something sets up that we can show you guys. But again, I'm not going to force things here. If we do look at if there's an S&T prevalent on between the NASDAQ and the ES, then between these highs I've set during the Asian and London, NASDAQ's at obviously punching new highs there, where the ES isn't just yet. But it's still early days, guys. We really need to start seeing, if I want to take a short here, some clear signs of selling pressure coming in. Otherwise, an SMT is not an SMT until the one catches up, right? So that's why you don't just go and look at that. You want to obviously start looking at the break of price structure. Things like this, for example. Where's that drawing tool? You make higher highs, high lows, higher highs, high lows. Price breaks structure, right? Price structure change. Obviously, this is now just shooting up to the sky like the NASDAQ typically behaves these days. So I would like to either see a price structure break, but there's no real price structure on this move to the upside currently. What I mean by that is just a one-directional move. Price is not zigzagging nicely like that. So that's out of the window. What else can I look at for potential signs of weakness? We got a nice big green fair value gap that just printed there on the 5-minute. If price can give us, for example, a bearish engulfing break that fair value gap, although I must say that fair value gap will only be confirmed at the close of this current candle, and there's still 2 minutes left on it. So if after this candle closes, there's a green zone remains there, fair value gap, and price breaks it to the downside, that might be an early indication that we could see a decline. What would be even nicer if we break that fair value gap, since price is in a area of interest for me, and another, let's say, bearish fair value gap forms, then I'll take a stab at it. But I'm gonna, just like Tiger does, probably take a very, very small position on it and see if we could ride it back to today's lows. But I'm probably sounding very optimistic.
Damn, I was doing good.
Yeah, we'll see. Who knows?
These are the days I lose money on the NASDAQ because I don't need a reason to go short. I just love it, you know.
Yeah, you love it. So at least you're on my side then.
Like I took a quickie while you were talking because you talked me into it and made a quick 10 ticks. But I will say I did it on the micro contract. So you know I made $5, whoop-de-doo. But
get this back.
you know I just couldn't stand it. You're talking about it. I'm like I gotta take it. I gotta take it.
Prematurely
you know?
bought.
But if you wanted to try to talk me into a long, you'll have to pull both arms behind my back and you know, beat me to take a long trade. So I have to fully disclose that, you know, I am definitely on the I'm the short trader, definitely short side trader.
I don't have to convince you, right?
No. If you go, I think I like this short, I'm like, in. That's just the way. That being said, like I said, I even though I recognize that I have a distinct weakness, even in an up market, I'll continue to short, and I will make money if I'm disciplined. It's whenever I get bullheaded and say, no, it's not going to go any farther, and I add to the position, you know, that sort of stuff. It just runs over me. But even whenever it's going up, there's still pullbacks, and I usually I'm very good at making money on those small pullbacks, but I'm willing to take, you know, five to 7 ticks on the ES. You know, you don't care if it goes farther than that. You just, because you know you're going against the trend. But I'm trying to work through whatever is going on in this head to try to go long. And that's a struggle. I mean, all of us have struggles, right? That's my struggle is trying to take those long trades. At least when you're at market highs, it's like I'm just drooling to go short. Sorry.
I love it.
You don't have to apologize for that.
Yeah, absolutely. Yeah. Thinking about this New Zealand Japanese yen buy.
You want to share a chart thing?
Yeah, I'll go ahead and do that real quick. It's moved a little farther away but there's a couple ways to really trade supply and demand. Like on this New Zealand dollar, Japanese yen trade, it is in the middle. Let me see here. I believe it's a 4-hour zone, but I don't know why I drew it like that. Oh, I think, okay. That's what I did. So this is obviously a 4-hour down candle before the push up. You can see to the left, I got a little bit of a minor contraction box with the value line coming out. So essentially what I did is, if I can just zoom in on it a little bit. You know, I typically go from wick to wick, or sometimes depending on the way it's shaping up, I might take my zone to the, you know, for a demand zone, I might take it to the proximal line, or I'm sorry, the top of the real body. And sometimes you can even take your zone to just the wick by itself. But this is just more a matter of preference, depending on how wide you want your zone. I mean, if it's like a big fat candle, I might just go to the, you know, to the top of the body for my zone. Or if it's a smaller candle, obviously incorporate the whole wick, which is typically what I do anyway. But anyway, yeah, having said that, you know, it's given a little bit of an opportunity. I mean, even if we went down to a 1 hour, I mean, the top of the wick on that last red candle, the price did touch it. Okay, so, but in the middle of flapping our lips,
now.
it was one of the pairs they didn't look at. So it's kind of essentially started to run off and leave. But what I was going to say is, you know, if as far as getting into this trade, I mean, the obvious stop loss point would be, you know, just below, right? Like that. But essentially, another way to trade this is,
well,
rather than incorporating the whole zone, if it's kind of running off and leaving, you could always get into the trade and put the stop loss just under the candle itself. Right. As it's wicked in. So, yeah, we'll go ahead and take a quick stab at this New Zealand dollar, Japanese yen, and obviously we would look to, you know, take profit up in this area somewhere. So before I do that, I want to make sure what my profit target would look. So that's 31 pips.
Better.
36. Yeah. So it's not quite a good risk reward because I'm not even to 2 to 1. I don't like to take 1 to 1s, 1 to 1.5s. I prefer 3 to 1 risk reward ratio. So that just barely almost being 2 to 1, I'll probably just skip that. So yeah. Now that I look at that, I mean, we can look to the top here, but it's not going to have much more. 2 to 1, it's just not that attractive. I would prefer that to be a 3 to 1. So yeah, I'll go ahead and skip that for now.
Yeah, I mean, very important, right? Risk reward ratio. You want to get paid, right?
Yeah,
you don't want to one-to-one.
And you know what's sad is that most traders do the opposite of what you do. They got in and then they look at their risk reward instead of going, is this a high probability trade? Is it 2 to 1? Is it 3 to 1? And then pulling the trigger.
Yeah. And not to mention the overhead supply. Now, obviously, the higher time frame overhead supply, that would make it a 3 to 1 in this area, but it's this immediate resistance that's throwing me off, because look how many times it hit. I mean, it kind of hit here, and then not to mention all this sideways, all this topping. So clearly that level is strong right now. So but I don't want a chance a 1 to 1, seeing if I can get a 2 or 3 to 1.
Well, and it's obviously not the optimal entry now.
Yeah, exactly. It's run away. Now, obviously, if I would have just touched and bought, let's take a look here, what that would have been. If just a touch entry, that's 25 pips to the top up in this area. That's 63, so 25, 50. I mean, that's still about a 2.5 to 1. I just prefer 3 to 1, especially with all that overhead resistance. So great example of what I think I posted yesterday. Some of the best trades we'll ever have are the ones we do not take. So always look at your stop loss, always look at your take profit, and make sure it's going to pay you. I mean, that's really the important thing, is just make sure it's going to pay you. 3 to 1, 4 to 1s. That's really where it's at. That's all I got on that.
Come on, Richard, we got to take that short, man. It's killing me.
Yeah.
The whole world is watching.
I think it's almost getting there, and we're in that zone. I'm going to take a small stab at this. We are seeing an SMT. Let me just share my screen before I talk too much. We're still at 3 minutes. We do have.
They're going to put us in Congress since
currently
so much.
A bearish SMT here, although I think it can go higher, but we're sitting here with 2 bearish order blocks above price. Price just entered into it. Not really any signs of weakness as of yet, but as I said, I'm going to take a very small trade here, and if it pays off, it pays off, right? If it doesn't, then so be it. Gonna use a stop above these clusters of highs and actually place a target order all the way at today's lows. Now that translates onto my execution platform. Obviously prices look a little bit different there, right? We're on the 5 minute. This is also just another indication of our prices change between different brokers, especially if you trade CFDs. But this is one heck of a strong move to the upside.
All right, we gotta get to work.
And as I want